some of the concerns right now with the banking bill can be addressed in the ag bill, and some of the concerns in the ag bill will absolutely be addressed in the banking bill. But when they're running on two parallel tracks instead of converging, that I think is causing some of the challenges, even with bringing Democrats along.
We have Coinbase's VP of U.S. Policy, Kara Calvert, joining us to talk to us a little bit about Coinbase pulling its support for market structure just a few days ago. Kara, welcome to the show.
Yeah, thanks so much, Jen. Appreciate it.
Thanks for being here. Now, let's just lay a foundation for our audience watching at home. Why did Coinbase pull support? There have been several communications from folks all over the organization, including CEO Brian Armstrong. But just lay it out for us. What are some of the contentious points that Coinbase just couldn't get on board with?
Well, I think what it really starts with is the idea that this bill had less than 24 hours to breathe. And it was a document that was released. Most of it, if any of it, had not been seen before. There was a very small group of people that had reviewed this piece of legislation. And that, I think, was an indication that there were some fatal flaws. And there were some provisions that we knew would get worse with a very, very short window to offer amendments and to try to solve some really important compromises. One of those, and we can talk more about it, one of those was how everyday Americans continue to earn rewards, and how we think about ensuring that the products and services that are out in the marketplace today, how we don't rip that out, especially when affordability matters most. And there are everyday Americans earning millions in rewards now. We need to make sure that we don't take that away from people. A second piece was ensuring that SEC can continue to really use one of its pillars of authority, which is exemptive relief, when they're trying to introduce and allow for new types of technologies, new types of different products and services. That was a really critical piece. There were a few other provisions, certainly ensuring that the DeFi provisions are right, whether it's in Title III under the Bank Secrecy Act provisions, or in other parts of the bill when we think about how developer protections evolve and how those rulemakings really look. Those were the types of things that I think needed more time to breathe. And certainly now, while I understand the concern that this has been delayed a couple of weeks, that is part of legislating. And I think we are all at the table, nobody left. There are a lot of constructive conversations happening. The banking bill is certainly, while I think they are moving to different things in terms of floor debate and some focus there is still work happening behind the scenes. And that's really, really important. You then have the ag momentum. And yes, I agree, Renato, that there is certainly the idea that this is a partisan market versus a bipartisan markup, and it's simple math. But at the end of the day, we have to get started. And this bill is very reflective of the Clarity Act. And that Clarity Act had 78 votes in the United States House. So we think we're moving in the right direction. We're looking forward to the markup on Tuesday. And we think banking is going to get back on track.
Before I let Renato jump in here, what's happened since Coinbase pulled support? Are you able to give us any insight into the types of conversations you've been having? What has the discourse been like with the White House? I mean, they seem pretty pissed that that Coinbase pulled.
Yeah, it was a serious time. It was a serious week. It is still a serious issue. And we are continuing conversations. Those haven't stopped. This was a very principled position. We had been saying for months that if rewards were put in danger, that Coinbase would have to seriously consider whether or not it could support moving forward. It was very clear that while the ANS had a compromise that we thought would both give the banks what they have been asking for, which is protection from balance-only rewards systems, and while at the same time ensuring that you could continue to reward and give promotional types of activities to different customers. That was, from our perspective, that was a fairly big give on the side of crypto to basically eliminate all rewards for anybody who holds a balance. That's a big deal. And that was completely glossed over in this process. And then we had 6 amendments that would have made the bill materially worse. And that was, I grew up in Wyoming. When you're looking down the barrel of a gun, you don't pull the trigger, right? That was a big problem for us.
You know, you referenced, and I think Jen referenced some of the, the White House's concern and pushback regarding Coinbase's position. There, of course, was a tweet or an ex post, I should say, from Patrick Witt saying, and it's highlighted here, no bill is better than a bad bill. Of course, he's quoting your CEO in saying that. I mean, does Coinbase actually believe, and you stand by the idea that having no bill at all, in other words, having essentially no permanence, no permanent legislation, relying entirely on rulemaking is preferable to having a bill that is, only accomplishes certain, partial goals or has flawed provisions in it?
Well, that's a really important nuance, Renato, that a bad bill from our perspective is something that tips the scale to leaving not just the crypto industry and market participants, but everyday consumers worse off. That's what we felt as we were looking at this piece of legislation after 12 hours, that it would leave everybody worse off. It doesn't mean it can't be fixed. And I think that that is critically important. These provisions can be absolutely fixed, and I think can be done in a way that doesn't endanger bipartisan support. And that is, I think, what we have to do over the next 2 weeks. And whether or not the markup would have been partisan or bipartisan on Thursday, I think remains to be seen. And so ultimately, we needed the time to make sure that these provisions don't leave all of the stakeholders worse off.
Renato said he was concerned. I said that a lot of folks I've been talking to behind the scenes have been optimistic. It sounds like you share that optimism, Kara, that we will have this legislation before midterms.
I think so. I really do. I believe that this is going to move quite quickly when we get through some of these key issues. And again, I don't want to undersell all of the good things that are in the banking bill. It provides an absolutely critical function of deciding what is a commodity, what is a security, how do we think about network tokens, how do we think about these types of sales and how those impact what consumers need in terms of disclosures. We need to ensure that those disclosures are right-sized and that they compare to, for example, what we see over in MiCA and in the European Union. We need to make sure that the provisions in this bill don't make Europe a more attractive place to launch and to engage in the crypto economy. So those are some critical pieces. We need to make sure that developers can continue to build and develop and do really exciting things here. But again, those are not insurmountable fixes. And the bill has a really strong foundation, coupled with the agriculture bill that also, from Coinbase's perspective, does the most important thing. The most important thing is to give the CFTC spot market authority over digital assets. That is because at the end of the day, the markets are not regulated at the federal level for non-securities.
Doesn't the CFTC have that in the current draft?
In the ag bill, yes. Yes, and that is why it's so critical that these two bills, like Clarity, are married up. And this process between the two markups and even before the markups, absolutely critical that that process is seamless between the SEC and the CFTC side. That's what we saw on the House side. They worked together to create one package that was stitched together in a pretty seamless way. That's the process now that really needs to play out on the Senate side. That we think even some of the concerns right now with the banking bill can be addressed in the ag bill, and some of the concerns in the ag bill will absolutely be addressed in the banking bill. But when they're running on two parallel tracks instead of converging, that I think is causing some of the challenges, even with bringing Democrats along.
Kara, I'd like to get in the weeds a little bit on stablecoin, what yield, rewards, whatever term you want to use to describe it. When I looked at that last banking draft that came out, it seemed like it preserved rewards being given to users for using a particular platform, a particular, let's say, exchange like Coinbase or et cetera. What is insufficient about that? Wouldn't that allow Coinbase and others in the space to do essentially what you want to do there regarding reward and yields? Help us understand.
Yeah, so I think the important thing to remember here is while I think Coinbase has been out in front, and certainly with a decision last week to opt to not support the bill going forward, this has become a central issue, but it really is an issue that impacts the entire industry. There was a letter that went out in December with over 100 signatures saying you have to protect rewards. And that's because there are so many different platforms that are seeing stablecoins as a huge, huge advantage for both businesses and for consumers. So they're thinking about, how do we transition customers from other types of payments or other types of platforms to our own, and incentivize them to leverage stablecoins in a way that benefits everybody. It's like switching phone companies. It's not really that hard, but there's just enough barrier that it's just kind of a pain. And so ultimately, you need incentives. Some companies give away free phones, some give away free months, some give away points. At the end of the day, it's the activity that is incentivizing somebody to use this new type of technology. That's why it was tricky to ensure that if we're thinking about, all right, we don't want to compete with deposits, and we would also, I think, query whether or not that's even a true premise that these compete with deposits. Ultimately, these are payment mechanisms. These are people who are leveraging them for different use cases. They're not just sitting them in, like you do in your, in your checking account or your savings account in your local bank. But ultimately, we were looking at how all of these different, it's been 6 months since the Genius Act passed. That's a long time for new innovations and business ideas to proliferate. So we were trying to understand, what are all the different activities that are happening that benefit consumers, and how can we make sure that if you are holding a balance, you are also doing something else. You are also using it, you're transacting, you're staking it, you're engaged in a loyalty program. All of those things were really important to make sure we got right.
I want to talk about this piece in that original tweet from Brian Armstrong. He mentioned a de facto ban on tokenized equities as one of the sticking points here for Coinbase. Can you talk to us a little bit about that?
Absolutely. So Section 505 was, again, I think took a lot of people by surprise. And all of you, maybe all of you, but certainly all of crypto Twitter, discovered that this was a section that created a lot of conversation. There were people on both sides of this argument. This section did nothing. And then there were people that saying this was effectively a ban on any kind of tokenized equities. We took the position, and we have a lot of smart lawyers. We have a lot of smart people who've been doing this for a long time, who said we are convinced that this would eliminate the exemptive authority of the SEC to write new rules or to exempt from old rules for tokenization. And that exemptive authority is an absolute pillar, as I mentioned earlier, of SEC authority. And when we start to think about tokenized equities, what does that actually mean? What does it take to bring a tokenized product to market? It means not using some of the old rules, like needing transfer agents or needing books and records, paper books and records. It means being able to use the blockchain for those types of things. Really technical issues that don't need a rulemaking to decide. They instead need the ability of smart regulators to say, this just doesn't make sense. If over the last 4 years, we had a regulatory environment where they would have used that, we may be in an entirely different place right now. But you've got the authority, and the idea is this is a race to the top with tokenization globally. Every single country out there that is looking at crypto is thinking about tokenization, and the United States can't fall behind.
You're right that it caused some discourse. CoinDesk spoke to a few CEOs in the industry who work in tokenization, one of them being Carlos Domingo, CEO of Securitize. And he said that the current draft doesn't kill tokenized equities. It clarifies that they're still securities. Some other folks said that they don't interpret clarity as a de facto ban on tokenized equities. How would you respond to that?
Well, I would say if we're having the conversation, the language needs to be fixed. If it is, and obviously very smart CEOs and thinking about this, if there is so much ambiguity or so much concern about the way it's drafted, it needs to be fixed. That is not the intent, I think, of statutory language to create more confusion. I think it's to provide, as the bill implies, clarity. And it would need to be fixed in order, I think, to bring comfort. I think we all share the exact same goal. There is no way that I think anybody wants this to create a loophole for securities regulation. That is not the idea here. If it's a security, it's a security. It doesn't matter if it's tokenized or not. They should have the rules ensuring that they have to comply. But ultimately, if you're requiring the same rules as you've had for the last 90 years, that's a problem. If the old rules worked, we'd be using them.
Well, we've been talking a lot about the issues with the banking draft, which of course we know about because your CEO did put out a statement and laid some of those issues out. I do want to talk a little bit about the Ag Committee draft that just came out yesterday. So it looks a lot like the Clarity Act, but there's clearly some reason why the Democrats on the committee, or solely some of those Democrats, aren't on board. Can you help us understand what the gap is between the majority and the minority on that committee regarding the current Ag Committee draft?
That's a great question. We are also digesting it. I think, we've had it for a little less than 24 hours. So we are looking through that and agree with your assessment that this is very similar to the Clarity Act. And so we are trying to evaluate what are the differences. I would actually posture that this bill includes more provisions that traditionally Democrats have supported. And that, I think, is something that we'll have to evaluate, and the Democrats will have to evaluate. Ultimately, I think that the position of the Democrats right now, and working particularly with the 12 Democrats who have come together to try to find a path forward on this, they span the agriculture and the banking committees. And as they evaluate both bills now, I think that there will be a more clear picture of where there are gaps and where there are not gaps. And that, I think, was one of the challenges, even leading into the banking markup, is what is the role of the SEC versus the CFTC? And without that agriculture bill out there, it was a bit of a vacuum where there were a lot of folks saying, oh, we need to make sure the SEC has more authority here because we don't know what's happening on the CFTC side. Now I'm actually hoping that with visibility across the comprehensive solution, again, knowing that some of these things still have to be stitched together, that Democrats can identify where the gaps are that they're concerned about, and then those can be addressed in the two different bills.
Sorry to jump all over the place. I
That's
want to
okay.
come back to something that Patrick Witt said. I know we referenced the tweet earlier on in the show. He also said if a bill doesn't get done now, it might be done under a less friendly administration. Does that concern you at all?
Well, I think if we go back to the threshold question is this going to leave stakeholders better off, better for everyday Americans, better for industry, better for builders, better for consumer protection? I think that if that's the case, certainly getting legislation done sooner rather than later is always good. But when you start to get into a split Congress, if the majority flips in either chamber, that's just harder to do. But again, you still have to count to 60. So we will get to 60, but the majority does matter.
One thing that oh, sorry. One thing I found interesting, Kara, in the Committee draft is there's now basically user fees, you could think of it, for the CFTC, that it has a funding stream that grows with its authority, which is an issue given, there's an OIG report that just came out this week showing that the CFTC is down over 20% of its staff. It appears to be, not have the resources it needs to do the job. How concerned are you, or are you concerned about whether the CFTC has the resources it needs to actually do the job of regulating this new spot market authority?
Well, it's a great question, and I think a very real concern. And we saw this issue actually start to come about years ago when this piece of legislation first started being vetted. This, interestingly, on the agriculture side, there have now been at least 5 bills that have looked at how to create CFTC spot market authority. And key to every one of those is, how do you fund it? How do you ensure that they have the resources they need, the manpower they need, the expertise that they need? And a big part of that is the funding stream. Before, historically, there have been 2 choices: appropriations or a fee-based model. A fee-based model, I think, does make sure that they continue to receive and continue to have the resources they need as this industry grows. So that, I think, is that is helpful in terms of charting a path forward and getting this across the finish line. It has been a major concern of not just Democrats, but Republicans as well. And so I think that is a really important piece of this legislation. Ultimately, they will need to staff up. Right now, as you mentioned earlier, one of the concerns is how does it look with one commissioner? What does it look like with staff down? How do we make sure that we have people in the seats that can actually effectuate this law?
All right, Kara, we have to leave it there. Thank you so much for spending some time with us today. It was a pleasure having you on the show.
Thank you so much. Appreciate the time.
That was Coinbase VP of U.S. Policy, Kara Calvert.